A world full of geological tensions, interest rates under extreme review around the world. I think uncertainties are now part of our not so certain world. However, in all of this, I think what seems to be common is the number of elections that countries around the world are going through. And I think another story which remains consistent in this economic environment is the India story. I think quite unilaterally, India seems to be on a growth path, firing on all cylinders, and there doesn't seem to be any way to let it down. And this is what our topic of discussion this evening really is. Good evening and welcome to a session on market outlook and investment themes. My name is Shoibal and I am the head of wealth and investments in HSBC in India. And with me, I have one of India's largest asset managers, Navneet Munot. And Navneet, apart from being an asset manager and, of course, a doyen of the industry, is also a friend of ours. He's the CEO of HDFC Asset Management. Navneet, welcome and good evening.
Good evening. Thank you, Saibal.
Super. So,
Always a
Navneet,
pleasure to be with you.
it's a pleasure to have you, Navneet, and thank you for joining us. Clearly, I mean, I've set the context of what's happening around the world, and we would want to hear from you as to how the India story really is panning out amongst all of this. So over to you, Navneet.
Thank you, Saibal. I just have a couple of slides. Normally, I don't use, but I just thought maybe just 4 or 5 slides, maybe just to give a global context, the world we are in, and you use the word uncertainty. And often I've quoted this line that, the world we are in, the only thing I can say with certainty, the world we are in, the only thing I can say with certainty is continuity of uncertainty. This is indeed a VUCA world. I mean that word is a cliched. I mean, but we live in a world which is volatile, which is uncertain, which is complex, and which is ambiguous. And in just one single slide, I put like a couple of pictures of several, the newspaper, I would say, headlines over the last 1 year, and just gives you some kind of an impression of the world that we are in. So you can see on the left hand side the geopolitical risk, the many wars that are going on, whether we look at the West Asia, Middle East, whether we look at Russia, Ukraine. In fact, some of the other conflicts like what's happening in Africa or in Azerbaijan, Armenia, some of these don't get the as much, I would say, media attention because of some of the other bigger concerns. So these are the hot wars that are going on apart from the Cold War between, let's say, a US China or a West versus China. China has its own set of issues. For last 20 years, it has been one of the biggest growth driver for the world. But whether it's a policy uncertainty, whether it's a property bubble, whether it's like variety of debt challenges, and then of course many other issues that the economy has been going through, and it's no longer the largest growth driver that it used to be. The population is peaking. This was the biggest supplier of the labor force to the world for last 20 or 30 years, helped tremendously in bringing down global inflation by exporting, cheaper and cheaper goods to the rest of the world. And then definitely that's changing, and the world's reliance on China that the world had excessively, I think, in last couple of years, that's undergoing a change, and everybody is looking at diversifying the supply chain. I mean, Europe, lesser talked is better. Whether I mean the issues related, I mean the political, the issues, whether it's related to immigration, the aging population, over reliance on US for defense, over reliance on Russia for gas, the political debate, polarization between the left and the right, and of course some of the fiscal issues that some of the countries are going through. Same is with the UK economy. I mean the general, if you've been traveling to UK, some of you and your colleagues would be, I'm pretty sure, would relate to what I'm saying, that maybe the level of confidence among whether businesses as well as individuals is at a multi-year low post Brexit. Whether the higher inflation, the fiscal challenges, variety of challenges on building the infrastructure or rebuilding the infrastructure that they are going through when we look at, and of course the banking challenge that we saw in terms of the failure of one of the oldest bank, which is Credit Suisse, When we look at the US, I mean, it was a year of the rating downgrade. The people are concerned about the highest ever debt level that US has seen in several decades. We have seen the interest rates at a multi-decade high. And of course, over the last several months, people have been waiting for a rate cut, but I think it's still some time away. The banking crisis that they saw last year in the month of March, and just to give you one data point, I will that. The banks that failed or that had challenged last year in terms of size, they were like bigger than some of the banks that failed in 2008. Of course, I think policymakers, particularly because of the fiscal stimulus that has been extraordinary over the last few years and even continuing. But at this stage, there'll be a point where people will get a lot more concerned about the debt levels in United States, and no wonder that they have seen the downgrades. And of course, I can just kind of like go on and on. The challenges with some of the supply chain issues, given the geopolitical issues, or what we have seen with the climate change, and the last year was like the hottest year in recorded history, and I can go on. Now, when you see this is the background, or this is the world that we are in, and now you look at like India and you feel so proud. There's a famous quote of Warren Buffett when he was asked about the secret of his success, and he said that, I was born in the right place at the right time. And I think I mean, all of us in India can really claim that. Now, in a world which is hyper divided, which is hyper polarized, I mean, India led G20 by saying Vasudhaiv Kutumbakam, the whole world is my family, the whole planet is my family. We inducted the African Union into G20. We reached the South Pole of Moon where nobody has ever reached before. We are eyeing Sun now. We became the most populous nation, and I must mention that a large part of the world, particularly the manufacturing powerhouses, whether it was China, Eastern Europe, many other countries, are going to face a serious demographic issue, and they won't be able to have the labor supply which is needed. And it's good to also see that we became the fifth largest economy. 10 years back, we were 10th or 11th largest economy in the world. This year, we kind of overtook Hong Kong as the fourth largest stock market. Over the last 4 years or so, India's weight in MSCI emerging market has increased from 8% to now almost 17% or so. And in the same period, China's weight has come down from 40% to 25%. And it's kind of like a substantial increase in the weight in emerging market. We saw record foreign portfolio investors flows, but of course, their ownership in India is coming down because domestic investors' ownership has been going up. We became part of the JP Morgan Global Bond Index, and then we are seeing the money coming into the bond market. We saw our services exports touching a new high. We saw our remittances touching a new high. This is the highest in the world, and no wonder that our foreign exchange reserves are the fourth highest in the world, and currency has been relatively a lot more stable than many other currencies over the last several quarters or couple of years. We are building infrastructure at a very, very fast pace. I'll take 2 minutes or so on that in a few minutes' time. And we are building like a lot of renewable infrastructure with our commitment on sustainability. There is a lot that we are doing on building the best in class digital infrastructure, reflecting in the UPI transactions, etc. Our GST mop up hit a new record last month. And of course, we got 100 medals in Asian Games. I can go on. But I think that, Saibal, all of us take a lot of pride is the participation of domestic investors, which have provided a lot of stability to our markets. Our equity market, bond market, and currency have been relatively a lot more stable than many other parts of the world. And the credit goes to policy prudence. The credit goes to effective communication by policymakers. The credit goes to agile execution, and a lot of credit to the participation of domestic investors. And no wonder that I genuinely believe that over the next 25 years, we are in a period where we are, on a journey towards becoming a developed country. Now, how does a developed country look like? You need to have a developed country infrastructure. There, I think if I split infrastructure into digital, physical, and social, in digital infrastructure, we are almost like looking like a developed country. Need to take huge pride in the biometric cards that we have got for every citizen, or what we have on digital finance. what we have on the online GST and the many other things, the ABHA, everybody has got almost like 500 million people are on that. Bashini, which is like another, some of these things I think will have longer term repercussion on also improving social infrastructure. On the physical side, the RRR, which is like where India has made tremendous progress over the last several years, is the roads, railways, and renewables. But similarly, I think the latest Economist has carried a story on how India's port capacity has been increasing, which will keep us in good stead on building us as an export powerhouse, and of course on communication, broadband, airports, etc. On the social, which has been a big weakness of India over the last several decades, I strongly believe that the way we are building the digital infrastructure and the technological changes in the world can help us in leapfrogging. So just like we moved from very few people having bank account to almost everybody having a bank account in their pocket through the digital banking or UPI, we moved from very few people having computers to now everybody is carrying a smartphone in pocket. Similar to that, I think we are going to see that in education and healthcare and skill development, so on and so forth. So I feel very, very optimistic on that. So that's on the infrastructure. The second, I don't have to talk much about it. The long-ranging structural reforms that we have carried over the last several years will keep us in good stead over the next several years. And the third thing, which doesn't get talked about as much, is the very high quality social security net benefiting almost 800-900 million people in providing a better quality of life so that they can think about their tomorrow and get more aspirational or ambitious about next generation than what historically they have been. And this is one of the biggest reform in India. I mean, we all talk about GST or Monetary Policy Committee framework or PLI or IBC and RERA, but to me, this is transformational in terms of really taking advantage of the demographics that we have got. But for this, we won't be able to have the benefit or the leverage, the power of demographic dividend that we have got, and it's getting delivered through the trinity of everybody having a mobile phone, a bank account, and the Aadhaar card, and all linked so that there are no leakages in the system. So all of this leads to ease of living, increasing the productivity of people, ease of doing business, enhancing entrepreneurship. The other way to look at it, all of this leading to more formalization of the economy. And with Monetary Policy Committee framework, focus on fiscal consolidation, focus on long-term structural reforms leading to a better financial sector, so on and so forth, leading to a more macroeconomic stability so that you can invest for the long run. This helps both boosting the consumption as well as investment. This helps all three. I mean, other way to look at it, the three pillars of the economy, whether it's services, whether it's manufacturing, or whether it's agriculture. And within that, I won't take much time on that, but I feel extraordinarily positive about the potential that India has got in tourism. And over the next several years, this is going to be one of the big area of I would say, in terms of boosting growth on the services side. And last but not the least, financialization of savings. As people get more confidence about the long-term growth, and with digitalization of finance, financialization of assets, and the efforts that all of us are putting in with the best-in-class capital market infrastructure and very high quality, the governance and transparency in mutual fund industry over a period of time, people invest more and more money, and they kind of make it a virtuous cycle of people invest their savings into capital markets, which kind of like provide money to the entrepreneurs that leads to capital formation, higher jobs, more incomes, where people consume more and people invest more, like that. After whatever I talk about, all the long-term story about India, is still the question, Saibal, I'm sure you would have, bazaar kya lagta hai? What next? Isn't market discounting all of this? So when somebody asks me, bazaar kya lagta hai? I mean, instead of saying, elections in next few days or US Fed or thinking like that, my framework is I look at four things, and this is what we do in our asset allocation committee. We look at macro, we look at corporate profits, we look at valuations, and we look at liquidity. I'll take 3 minutes on all of this, and then we move to question and answers. From macro, I won't add anything more. I think whether you look at growth inflation dynamics, India growing at 7% with inflation well contained relative to rest of the world. Whether we look at the balance sheet of corporate sector, household sector, and government now is embarked on fiscal consolidation, whether we look at external sector in terms of our trade deficit, current account deficit, level of foreign exchange reserves, BOP, so on and so forth. Whichever way we look at it, I think I feel very positive on the macro, and more so in the context of the first slide that I had of the world we are in. On a relative basis, I think in India's macro look pretty robust. The second, on the corporate profitability, I would just say one thing, that corporate profits of all listed companies as a percentage of GDP touched a high of 7% in the last cycle, the last bull market in 2007. They touched a low of close to 2% or so post COVID. And now we are at like close to 4.8% or so. But still, I think over the next couple of years, corporate profits can easily grow at the pace the nominal GDP grows, which itself should be like 11, 12% or so. So which means that I mean, we have a like kind of like at a right place from a cycle perspective. The third thing, valuation is where, of course, I think because of the better macro, because of higher liquidity, the valuations are at a premium. But on a relative basis, small and mid caps are at a higher premium than the large caps. And last piece, I mean, liquidity and the sentiments. So from a liquidity perspective, the two large set of investors who put money in the market, domestic and the global investors. Foreign investors put record sums of money last year. There have been selling in last couple of days for various reasons, but structurally, Saibal, if you ask me what I think about the foreign flows, I think from a longer term perspective, 24 out of last 30 years, if I remember my number correctly, foreign portfolio investors have been a net buyer of Indian equities. 24, if I remember correctly, out of last 30 years, they've been a net buyer of Indian equities. And that's been mainly for two reasons. Number one, structural growth story, a very good long-term macro story where you get structural growth, very low penetration, demographics, relatively more stable environment to kind of put your money relative to other emerging markets. The number two reason has been a very large universe of high quality companies, companies with good governance, companies with world class management, companies across various sectors and businesses with high growth, good return ratios in terms of capital efficiency, very high quality disclosures relative to other emerging markets. So one, the macro story, and second is the micro story. The third dimension that has got added that makes me more positive about the longer term outlook on foreign portfolio investors' allocation to India is the greater amount of domestic investors' participation. Because as domestic investors put more money, what it does is provide more stability to the market, reduce the volatility in the market that we used to get because of the vulnerability on foreign portfolio investors, which means that if domestic investors continue to put the kind of money that they have been putting in, market volatility goes down, you can get in and get out at a much lower impact cost. And that actually put the third dimension, the third positive dimension to attractiveness on Indian equities. On the domestic side, I don't have to say much. I think the penetration has been increasing, but we have a long way to go. The SIP flows have kind of like more than doubled in last 4 years, gone up like 5x in last 6 or 7 years. But I think still we only have 45 million mutual fund investors and maybe 150, 160 demat accounts. Unique investors in capital markets are still less than 10 crores. So we have a long way to go. I think what will happen that on one side, we have got decent amount of positive flows, both from foreign investors, domestic institutional investors, and retail investors investing directly. On the other side, from a supply of equity perspective, it wasn't as much to absorb the kind of flows. What I expect post maybe elections is that over the next couple of quarters, whether it's more dilution by the private equity and VC investors, whether it's more divestment by the government of India in terms of selling a stake in the public sector or more monetization of assets, or maybe even for the capex, some of the larger companies raising money for actually doing the capex. All of this, because the kind of flows we are going to get both from domestic and foreign investors is going to be substantially large. I mean, if we don't get the supply, then market prices will go up, valuations will go up. But I think this will meet with more supply that will provide probably some kind of demand supply balance to the market. There are few pockets of exuberance. I think if you go down the cap curve in SMEs, you also get a little worried looking at what's happening in the F&O market, etc. But by and large, if I look at the macro profit trajectory, liquidity, valuations are on the higher side, and no doubt about that. But overall, I feel like structurally for a longer term investors, a positive outlook. I'll just take 2 3 more minutes. The difference between India's growth story and let's say a country which was at same place where we are today. 20 years back, China's GDP was almost same, per capita GDP was almost same where we are today. But look at the difference between what the capital markets have done. And the reason is that China and many other countries, their GDP growth was not equal to the corporate profit growth, was not equal to the market cap growth, and they did not have a mutual fund industry which could deliver the same returns to a minority shareholder investing few thousand rupees a month or few lakh rupees or few crore rupees. This is like very exceptional, and we have only seen in countries like United States where you have consistently high nominal GDP growth. You have a corporate sector which is able to convert that growth into their revenue growth as well as profit growth. And you have a capital market which could convert that profit growth of corporate sector into the market returns, and you have a mutual fund industry which could convert that market returns into the returns for their unit holders, plus some bit of alpha. This hasn't happened in many countries, and this is something that makes me positive that if you are a long-term investor, and this is my last slide, if you are a long-term investor, the trick to make money is only one, which is the formula. And just so that, to ensure that people remember, that's why I put this acronym STP. SIP is a very famous acronym in India. Everybody uses that. But the STP stands for sound investment plus time plus patience. I'm sure all the investors that you have would have followed the Berkshire Hathaway annual meeting this year, and they had, of course, a big tribute to the legendary thinker, thought leader, and investor, Charlie Munger. And I just put one quote, which is, I think, very, very relevant when we are going through this intermittent volatility in the market over the last few days, that the big money is not in the buying and selling, but in the waiting. And in a country like India, where over the next several years, or rather, I should say several decades, where we are going to have a very good macro growth story, I think the way to really create wealth is to keep this acronym in mind, that wealth gets created by sound investment plus time plus patience. A lot of investors talk about, isn't the market at a peak and should we invest at this time? In fact, I've not put this slide because then I have to put like a lot of other disclaimers and many things, is that if you put money in, let's say, which one? Maybe an HDFC FlexiCap fund. We have been around for now 29 years. If you put money in March or let's say January of 2000, Sensex touched a new high, and after that, for next 2 or 3 years, market didn't do well, and you just remain invested till now, you would have made very good returns. And then you were so unlucky that the second time you did was that January of 2008, market at an all-time high. You only put money then, you would have done well if you kept your money now. And if, let's say, you put money in February of 2020, where Nifty first time touched a high of 12,000, and then you got hit by the COVID and market fell by like 30% or so in a few days' time, but you didn't do anything to the portfolio, today you are sitting on very good gains. The point I'm making is, given the long-term growth story of India, I don't think that timing really helps you as much as just kind of like remaining invested and keeping that faith on the long run. So on that happy note, Saibal, happy to take any of the questions that you've got.
Navneet, super sharp as usual. I think the way you presented data and sort of brought out the India story was commendable. I of course was taking some notes, and I'll sort of start off with the first point I think which you made, and which is like all pervasive in your conversation, and that is about the structural growth story that is happening in India in terms of demographics, digitization. You talked about how social infrastructure is being built on the digitization, digital model, and of course, the push around policy, which is impacting a whole lot of these things. But if I were to ask you to choose one element which you think is really the differentiator, which one would that be?
So until few years back, I used to say that there are 4 Ds that make me very positive about India, which is like there are not many places in the world which can say that we have democracy, we have demographics, we have demand, and we have digitalization. And on digitalization, like in a very short period of time, we have transformed from the most data poor society in the world to the most data rich society in the world. And it's transforming the society. It's transforming, the government services to the last mile. It's transforming businesses. It's transforming many things in the society and creating newer opportunities. But I added fifth D a few years back, and that's a determination. In my life, I've never seen Indians as determined to do well as they are today. I think the ambition that we have got today, the aspirations that we have got, particularly the girls in India, that makes me the most bullish about India. I come from a small town in Rajasthan, and I travel across the country. The thing that makes me most bullish is the rising power of women and the smaller towns and across the country in India. And that aspiration, that ambition to do well, I think will keep us very different. I can talk about all the reforms, the infrastructure, what's happening in the digital world, the unicorns, the financialization of savings, and all of those things. But to me, I think it's a real hunger in those millions of people to do more because they think that this time is ours. I think that makes me most bullish on India.
Fantastic. I
I
think
don't know whether you're
brilliant.
looking for a different answer, I will.
No, 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 absolutely not. I think
More
as
from a
usual you
macro
come up.
perspective, I think I'm sure everybody reads that all the time and didn't want to kind of
No,
like go
this is
on that.
something this is something which is very different from a perspective point of view. I think, like you said, everybody talks about the macro perspective, talks about data and number and structure. But I think the point that you make is suddenly there's an exuberance in the Indian mental setup about succeeding, about doing better than yesterday, and that makes a big difference. But I'll add another D to the 5 Ds that you've just talked about, and you talked about it. I think you said that domestic institutional investors are becoming a much larger player, especially especially from a fund management industry point of view. But you also said that penetration of financialization is still limited. It's not really as much as you would want to be. So how do you see this? Do you see this that the DIIs continue to be playing a major role? Do you see domestic investors, both institutional and retail, continue to be coming on board? Do you see the challenge there? How do you see this in the, let's say, short to medium term?
So even this part is also, kind of you can relate to the point that I made earlier, the aspiration among people, the ambition among people, the rising risk appetite across, strata of society or across age groups. I mean, you have younger people who are opening a demat account, a brokerage account, starting with an SIP, or of course, I mean, these are early days. I mean, people are also, I keep hearing, I mean, even there are a lot of people who are doing something in crypto. There are people who are doing gaming apps, but investing is not I mean, and they think it's another form of entertainment. It is not. But what it shows is that the aspiration, the ambition for wealth creation, the ambition to make more money. This again is a big societal trend, and I think we have a long way to go. These are very early days. I've seen the 85 bull market. I remember the 92 bull market. I remember the 2000. And I think if I go back in history, I think Indians by nature has a higher risk appetite. And I think what we are seeing, I mean, we can say that how the SIP flows have increased, how the demat accounts have increased. My view is you aren't seen nothing yet. We have a long way to go because still there's a very small part of the population which has invested in capital markets, and this number will keep increasing.
Interesting. I think before, I
If
mean,
I
I
give
have
you one
my
data point that if you look
sure,
at the
sure.
Indian household balance sheet, it has 50% in real estate, it has 15% in gold, and large part of the other would be, bank deposits, insurance, provident funds, the PPF, postal savings, so on and so forth. The allocation to equity is still less than 5%. It's 4.8 if I remember the last data. It has increased from 2.4 to 4.8 in last 10 years, but 4.8 is too small an allocation. This is a household balance sheet in aggregate, so we have a long way to go.
So, Navneet, I had put together a few questions basis what you're saying earlier, but I've already got a range of questions from the audience here, so I'll go to one of those questions first. Something that is really interesting. I think the question says, uh, the positivity is mutual funds and stock market. It's moving upwards, but there is slowness in manufacturing sector. If we need to compete with China, we need to boost exports and manufacturing. That our country will not grow at pace. But fundamentally, the question being that all the exuberance that you see, is it really service driven? Is it really only financial services phenomena, or is manufacturing playing a large role in that as well?
No, I think it's multi-pronged, and I think several pillars of growth drivers. So I'm talking about the manufacturing. I mean, you're aware of the NFO that we have done recently, and what we said was that it's a play on rising consumption. I think whatever you are consuming, if that goes up because of the lower penetration, we are still at $2,500 per capita. As you go to three, four, $5,000 per capita, or 1.4 billion, you need to produce that, right? Because a large domestic market, I mean, there is an opportunity to manufacture that. And of course, it's a play on the investment cycle. We have a long way to go. We are creating infrastructure at a very fast pace. But as of now, still like large part of that is driven by the government. We are yet to see large scale private capex, which is likely to kind of happen maybe post elections and in a couple of sectors, particularly the renewables, etc., that I talked about. And automation of like most of the industries will have to go through a lot of automation going forward and have to kind of like redesign themselves. That's a play. It's a play on exports. I think rising opportunity because of the China plus one, the globally almost every organization, every country, every society wants to move from a hyper optimized supply chain to a more reliable supply chain. And I think India, given whether it's a labor supply, given its favorable policies like lower corporate tax rate, the PLI, and the focus on indigenation, etc., can really stand out. And now that infrastructure we are building, so you need cheaper and reliable power. You need like good logistics and a better turnaround time at your ports and roads, etc. And we are improving. So I think the ingredients are in place for a sustained growth in the manufacturing. Yeah.
Interesting. So you're basically saying is manufacturing by itself also has a sustainable growth pattern that you see, and that will go to continue for a
Absolutely.
medium long term.
Absolutely.
Interesting.
Absolutely.
This is the devil's question. So we're talking about all positive things, great and things happening. What do you think are the hurdles or drawbacks that you see to this entire growth story?
No, of course. I mean, first of all, from the market perspective, while we are in a 25-year, maybe or whatever, a 50-year growth cycle starting from a very low base and everything that we talked about so far, but markets will have their cycles, right? I mean, it won't be like a linear growth that if corporate, so in equity market, you get returns from three sources, right? I mean, you have earnings growth, you have dividend yield, and you have a change in PE. There would be times maybe earnings growth for a quarter or two or maybe a few quarters is not like keeping pace with the GDP growth. Sometimes it's higher, sometimes slightly lower. But over a period of time, what we have seen in India is that the corporate profits has at least will grow in line with the growth. But there would be some cycles there. And the P ratio can change, right? Depending on the liquidity,
Mm.
sentiment, global flows, so on and so forth. So markets won't like deliver in line with the GDP and profit growth year on year, quarter on quarter. I mean, that's the nature of the beast. I mean, that's the nature of the markets. From an economy perspective, the risk can come from rest of the world, right? I mean, if we talked about the geopolitics, we talked about, let's say, the unpredictable macro in the world. If inflation turns out to be higher and the rate cut expectations which are there, if they don't materialize and the cost of money is higher, that can impact from a flows perspective or from trade channel perspective. If, let's say, oil prices go up, if there is any mishap on the geopolitics front, I think it'll impact India a little bit lesser than what it used to impact in history, but still it'll impact us in some manner. I mean, we cannot say that from the world. I mean, whatever happens in the world will continue to do well. I mean, we will do well on a relative basis, but that will impact us. What can in India the risk I see? Maybe complacency. I think we shouldn't like kind of at any point in time think that we are the only game in town and we have arrived. we are still at $2,500 per capita. So whether it's policymakers, whether it's business community, whether it's like society, each individual, all of us have tremendous responsibility on our shoulders that this growth has to be sustained, and we don't make mistake in any part of the society that it can derail the growth prospect. Yeah.
Now, interesting. So basically, what you're saying is that there is, of course, an external factor which may play out, which could impact India economy as such. Two, what you're saying is that while if you keep that away and broadly the Indian economy keeps progressing at the rate it is, the markets obviously are slightly different. They may not necessarily have a unilateral growth which is following that
But if you have a longer term view, you will do well. I mean,
you
over
will
a
do
5,
well.
10, 15, 20-year period, if you remain
Understood.
invested, you'll do very well. But there'll always be, the point I was trying to make is that it's not that every quarter you will get, I mean, if the
Uh,
market's likely to deliver, let's say, I'm just putting a number, not that that's a prediction of the market return, but 12% doesn't mean, I'm sure, I mean, the audience that you have, I don't have to talk about those things, that it won't deliver like
Understood.
3% every quarter. Yeah.
So an interesting question, Navneet, this one, and I'll read this out for you. It says, "Thanks, Mr. Munot. Given a choice, where should one put his money, in mutual funds or equity, even if you are a conservative investor?"
I mean, all my money is in HDFC Mutual. I don't know what is Simon's location is, but to be very honest, I think that see each individual is different, right? I mean that depends on your time horizon, that depends on your return expectations, your risk appetite, your the liquidity preference, the tax, etc., and then all of those factors. And I would say, I mean, an HSBC private banker can kind of assess that far better. But I think if you have a longer term horizon and if you have a risk appetite, I think larger allocation. I mean, particularly the clientele that you have and who would be on the call, where I keep saying, I mean, in India, the two things we need to keep in mind. One is that the average lifespan will keep increasing. I mean, it is now a little over 70 average life expectancy, but in our lifetime, that's going to increase substantially. So, I mean, we need to invest a lot more. Our incomes are rising, our expectations on wealth is going to go up, the lifestyle inflation is increasing. So, we need to invest a lot more than what we have invested, and we need to take more risk than what we may have taken to meet those aspirations. Yeah.
Interesting.
But that
So
that
on
depends on the time horizon. I mean, that we need to keep in mind, and the risk appetite. I mean, if you can like kind of stomach some bit of drawdown because equity markets are always prone to that. Let's say, I mean, anything happens in like this election or any time later, anything happens in the world. Because I mean, I'm not talking about the election in India, but you talked about at the beginning that there are elections in different parts of the world. So markets may remain volatile globally and will have some impact on India as well.
So, like you said, I think this is where we come into play as wealth managers. We sort of enable customers to take a decision
Exactly.
basis their risk-taking ability, times horizon, objectives, and so on and so forth. Thank you for making a pitch for us, Navneet. Um, on
You guys do
on
an
on the
outstanding job.
on the question around where to invest, I think another interesting question has come, and this is something, Namit, I'm sure you would have been you're fully aware that there is going to be a beginning of a rate war in terms of deposits amongst banks. Of course, liquidity is something that is being pushed through. Do you think that is going to impact flows into funds at all? Do you see that to be a challenge? One, two is, do you see rates really going up from here, or what's the broad view around rates?
See, we have seen substantial amount of like rate hikes over the last 2 years or so, 1.5 years. And whether it has really impacted the overall monthly SIP flows, not necessarily, because as I mentioned in the beginning, and it is not only the retail individual investors, the affluents. I think even the rich families and the family offices that I meet, I see under allocation to equity. To be very honest, I'm sure you would agree to that. That I think people are under allocated to equities as an asset class in India, and and also from a technical perspective, over the last 2 years, for right or wrong reasons, many families they think that something or the other because the news flow has been so erratic and so I mean there's so much of uncertainty in the world that people kept thinking that maybe I think we will get an opportunity to deploy larger sums of money. And despite all of that, thanks to the structural long-term macro story, and the overall the corporate behavior, as well as I think the domestic flows and global flows, market hasn't really seen a large corrections giving an entry opportunity to the investors. I think what investors need to do is like taking a little more longer term call rather than too much of, I would say, trying to like get the tactical entry opportunity. That's why in fact, I though I removed that slide to keep it more crisp, but I had that slide on like a longer term 29-year history of our fund to show that the timing really didn't help you much, to be very honest. I think it was more about the call on the asset class and taking that leap of faith that over a longer period of time Indian equities would deliver you far better than most of the other asset classes.
No, no, absolutely, Naveed. Of course, I think we all, in many ways, believe that that's how it's going to be. Um, so there's one question which I had brought down, and I see a similar question coming up here in two parts, Navneet. One is about gold, of course, and this is not the first time in the history of investments, but the gold is coming as one of the key. Alternates, not alternate, it's the key complement to what investors get into. So, a bit about view on gold. What do you see? Gold playing a role in? Do you see prices going up? Do you see it becoming a larger component of investor portfolios?
I think it's a hedge against the increased geopolitical risk. I've been saying that when the Cold War ended in 1980 or so. Over the last 40 years, we had a great peace dividend in the world that ended sometime in 2020 or so. We are in a world where there is heightened, I would say, polarization, and we are in a very divided world now. And we are seeing some hot wars, and of course a larger Cold War, which is being between China and the rest of the world. In that, I think it's a hedge against that. It's a hedge also against, let's say, something happens to let's say some of the fiat currencies. Dollar has been like the reserve currency of the world for several decades, almost a century now. But I think given the level of public debt in US, also the weaponization of dollar that they have done, some people have concerns about it post the Russia-Ukraine war. Also, maybe a hedge against rising inflation, just in case the inflation remains persistent. So, against like all of that, gold has come out as a hedge. Also, from a currency diversification perspective, people have seen, I mean, a substantial weakening in Japanese yen. The euro, which was supposed to be like the next big thing after let's say a dollar, but again there have been disappointments from like eurozone several, I mean, every few years. The UK again, the larger another currency has its own set of issues, and post Brexit even more. So then, like, what is the diversification for central banks also? And then they have bought, I think, 1,000 tons last year and 1,000 tons year before last. So they've been a very large buyer, and of course, even the institutional allocations are very limited to gold, hardly any. So from an overall allocation perspective, gold has been highly under allocated asset class for institutions, central banks, etc. And maybe they've increased the allocation a little bit. But one needs to keep in mind, as Buffett like, and it's all, I mean, it doesn't earn anything. It depends on that, the hope that somebody else will pay a higher price going forward. So it has to be a small, very small part of your portfolio as a hedge. And I always jokingly say that if you have a large portfolio, keep some amount of gold as a hedge. Like you buy a very costly car and you buy an insurance, you don't want your car to get banked so that you can make money from insurance. It's just like if a lot of things go wrong and other part of your portfolio get hit, that day I think gold will deliver well. So for that reason, you need to have some gold in the portfolio. Yeah.
That's an interesting similarity that you have drawn between a car insurance and gold. On silver, of course. Again, I think the question says that silver is moving up in tandem.
Actually,
Should there
yeah,
be a
gold silver.
shortage? What's your
Sorry
views?
to interject. I mean, the gold silver ratio has kind of like a stand quite favorable in favor of silver. Silver also has industrial usage, and maybe whether it's the solar or maybe the increased, the demand for air traffic, etc. Over the next several years, given the industrial uses and like gold and many other things, even for I'm told like whether the electronics, etc. I think yeah, silver could be an interesting thing, yeah. And it's like always considered as like a bullion apart from gold. So that could also be an interesting asset class. And now you get the ETFs and I mean you have our silver fund fund of funds. So there is easy way to participate. Otherwise, you can't deploy large sums of money like gold and physical silver. Yeah. But now through the ETF
Indeed.
or fund, you can deploy money.
Indeed, indeed. So basically, all of the asset classes would have some space to occupy in your portfolio. Of course, depending upon your risk
Absolutely.
appetite, etc. There is a view that you can take. I know usually you're not someone who would give a view, but tell us if you're looking at a 5 and 10 year horizon, what kind of sectors should one really be have interest in there?
I think I've always mentioned this. I mean, we talked about manufacturing, we talked about financialization of savings or financialization of assets, we talked about digitalization, we talked about development in India, the opportunities in social infrastructure that I talked about, how healthcare and all can change over the next several years. I think, we are an economy at $2,500 per capita. We are 1.4 billion people. We'll be the largest supplier of labor force to the world. We'll be the largest supplier of new consumers to the world in many categories. There are many opportunities across businesses, and the beauty of Indian market is that I always say that we are a stock picker's paradise. From a breadth and the depth perspective, we have more than 500 companies which have $1 billion market cap with like decent liquidity to deploy some money. So with that, focus should always be on bottom up stock picking, and not like a very narrow theme from a technical perspective. I think, like for example, I mean, relatively manufacturing, there are like hundreds of stocks across. While we say it looks like a sector and thematic, but there are like within that you get capital goods, engineering, construction. I mean,
Hmm.
you can get whether it's healthcare, whether it's there are many plays within that, and there are opportunities everywhere in India. I think one I would say that I mean you'll be better off you're a bottom stock picker. You get the management right and you get the company right, yeah, and of course the stock price right.
In interest, I mean, yeah, obviously, I'm sure it's really about the stock than only a sector because obviously good companies always
I mean,
perform
it's a broader
usually
theme
perform
and it's
long run.
okay, yeah. But otherwise, a narrow sector.
Sure, sure. So now of course there are two interesting questions. One is we've had a fantastic run on small caps for a while. um, Now the question the audience basically is asking whether they should now move from small and mid cap to large caps. Is that what one should do? What's your broad sense around that?
No, so when I talk to, I mean, Rahul Bajal, who manages our top 100, or when I talk to Chirag, our head of equity, and all of those guys say that on a relative basis, when they look at valuations and mid caps and small caps, of course, it's a much larger universe relative to large cap. You have stock picking opportunities, but at the same time, when you look at the index level in my slide, also you have seen the valuations are relatively more favorable in the large cap space, and you have like a couple of very large companies with still a lot of growth runway ahead of them, available at relatively better valuation than some of the small and mid caps. And lower you go down the curve in terms of market cap, maybe because of the retail participation, maybe because of various other reasons in a market which has got momentum. Some of the stocks are relatively a lot more richly valued. So yeah, there is greater margin of safety in large caps, and some of the companies are like given the growth that they have, are available at a reasonably better valuation on a relative basis.
So Navneet, as we largely come to the end of this conversation, unfortunately, we have a limited time to talk to you. Um, should I summarize by saying that as a retail individual investor, at this point in time, a multi-cap strategy could be a good way to sort of play this market out to remain invested for a long period of time?
I mean, so the advantage of multi-asset is you get allocation to all asset classes in one single fund. I mean, you get exposure to equities, you get exposure to fixed income, you get exposure to gold, and fund manager can manage it a little dynamically depending on the valuations and where they see a relatively better value. Yeah. So wherever HSBC private bankers are not doing the allocation for them individually, then they can choose multi-asset.
Superb, superb. Navneet, I'm getting huge amount of questions on real estate. Not
I'll
sure if
keep
that's
my
something.
answer short so that we can take a couple of them. Yeah.
Yeah, so there's one question around saying that would real estate you talked about financialization of the Indian economy, especially where you are moving away from real asset and buying into financial assets.
No, but the allocation to real, I mean, real estate, we are in a, we are in, I mean, just at the beginning, or maybe, I won't say absolute beginning, but I think we had a long, like, lull in real estate, right? Particularly residential real estate for almost 7, 8 years. We are in a cycle, and this is a genuine buying by the potential homeowners, and not a speculative demand. We haven't reached that stage yet. So we see like prospects for volume growth for over the next several years. I think from an affordability perspective, from I think the genuine need for housing over the next several years, I think we are in a good cycle. Yeah, I mean, again, the real estate is like about three things: location, location, location. So you cannot generalize at a macro level, but by and large, I think we are in a positive cycle.
Fantastic. And Navneet, of course, I mean, whenever you talk about global economy and you spoke about dollar, dollar continues to play a very large role in what's happening globally. Share a bit about what you think about the US equity market, the overall US economy right now, and of course, a bit around. Do you see any interest rate, any policy decisions coming in soon? Which
Sure.
way do you think it's going to go?
No, interestingly, when we talk about the Indian markets, Saibal, we always said that, you go down the cap curve and you are seeing like much higher PE. I mean, and you go like really down the cap curve in SME stocks and all, there's like real exuberance. But the larger caps, I think, are relatively cheaper. It's other way around in US, right? I mean, you take the Magnificent Seven out, most of the big tech, and then the rest of the market is not as richly valued. It's basically some of those companies, whether it's Nvidia, I mean, Meta, Apple, Amazon, Alphabet, and some of those I think kind of like completely stand out. Their relative weight in the index is at a historic high. Is this time different? Only time will tell. We have seen this before. Of course, as of now, really looks like if AI is transforming the world, if I mean, the world, then those companies have a big beneficiaries. They derive a lot of their revenues from outside and so forth. But still, I think it's a very different kind of rally than what we are seeing in India. From an economy perspective, of course, this is an election year, and there'll be like the decibel levels, I think, will be very, very high on trade policies, on various policies, etc. So I think markets will be relatively volatile. On the rate cut, my sense has been, and this has been my view for last 2, 3 years, that this time, I mean, though those are the four most dangerous words, but on the rates, I think this time is different. There are some structural factors. I think the repricing of labor, which we are seeing in US and other parts of the world, the whole optimization of supply chain to a more reliable supply chain is inherently inflationary. Climate change, I think, to counter that, I think we are talking about the greenflation, so much of money printing over the last several years, and the fiscal deficit that is structurally inflationary. Some of these are very, very structural factors to push up inflation, and it's unlikely to like come down in a hurry. Policymakers, I think, in other parts of the world, I think in India we have done relatively a better job, but I think policymakers have done some excesses and now paying a price. It won't be very easy to for the Fed to embark on an aggressive rate cut till the time they see inflation like sustainably falling below 2%. The last CPI data yesterday was like better, and that's why we have seen rally in fixed income. But I don't know. I mean, the next meeting will be in July and then in September. If they don't get an opportunity to cut in July based on his last few speeches, how will Powell get an opportunity to cut in September? Only
Yeah.
one meeting before the election, because then Fed will be kind of accused of the incumbent. From a political perspective, it will become very difficult for the Fed. So I think unless the data, it's completely data dependent. Unless the data is really supportive, I think Fed will find it tough.
Super. I mean, I think I haven't had an hour which has been this interesting, and we've come to the end of this session. But I must and share with you that there could not have been a better way to end this session, but to hear one of the audience writing into us. The comment says, "Thanks very much. Very insightful. Feeling more proud as an Indian. Our time starts now." So brilliant, Navneet. I really appreciate the
No
time.
power on earth can stop an idea whose time has come, and our time has come.
And our time has come. Fantastic, fantastic,
Thank you.
Navneet. our pleasure to host you this afternoon,
Always a pleasure to meet you.
and we of course shall talk again very, very soon.
Of course.
Thanks a
Thank
lot,
you. Wish you all
Navneet.
the very
Good
best.
evening.
Go and
Thank you.
vote on
Thank
Monday.
you.